dealing with further contagion and stateside, according to Bloomberg, Digital Currency Group faces an investigation by the U.S. Department of Justice and SEC on the transfer of funds between DCG and its Genesis unit. And of course, folks, DCG is the parent company of CoinDesk. But joining us now to discuss further is former Deputy Superintendent of the New York Department of Financial Services, Gareth Rhodes. He's currently Managing Director at research firm Pacific Street. Gareth, great to have you. So just looking at some of the filings here, DCG Genesis have not been accused of any wrongdoing. So why is DCG under the crosshairs of the DOJ and SEC? Maybe you could walk us through this.
Sure. Thanks, Christine. Great to be here. Good to see you, Emily and Lawrence. Great to be joining you this morning. So I think there's a few things going on here, and I only know what's been reported in the news, of course. I think when people see the word subpoenas, it's a scary word, but subpoenas really are just a way for regulators and law enforcement to be able to go out and collect information. Used to work at the Department of Financial Services, and often when you see something either reported in the news or you hear something that might spark your interest, subpoenas are a way to send out to collect documents, find people's emails, kind of look through what's been going on. It's not necessarily a sign of wrongdoing or even that some sort of charges or some sort of filings will happen down the road. It's quite common for regulators to use this. So I think there's been a lot of concern, obviously, given what happened in the crypto markets over the past year. I think there's also a very big difference between a Connecticut-based venture capital firm that's regulated here in the United States versus some of these overseas, more opaque entities that aren't under the U.S. regulatory structure. So I think I wouldn't jump to any conclusions just because we're seeing subpoenas going out. I think this is in very early stages, and this is really just regulators and law enforcement just trying to get more information and understand what's happening out there.
That's some sober analysis here. No jumping to conclusions, but on the flip side, we have crypto exchange Gemini making allegations of a commingling of funds between DCG and SEC in an open letter on Twitter. Is there a sense that DCG Genesis could face similar scrutiny as FTX, which was also accused of commingling funds with their hedge fund Alameda Research?
I think the law enforcement, the regulators, they're going to use these subpoenas to gather as much information as possible. They're going to look at what decisions were made, what decisions were not made. They're going to go through this very, very carefully. And I think there's obviously a difference. I think we'll see between commercial and business disagreements and disputes about what the contracts and what Gemini users, what they agreed to when they decided to enter the program, and what Genesis's obligations were under that program, and DCG's relationship with Genesis, and how those funds were managed, and what eventually happened to those funds, and what type of third-party risk management systems were in place. All this will be looked at by the regulators. It will be, they'll go through it with a fine-tooth comb. I think one thing that we're certainly seeing in the last, with this this investigation and certainly others, there's been a lot of discussion about, is Congress going to enact new regulation? Are there going to be new rules in place? We are seeing time and time again, we see with the CFTC's lawsuit this week in the Eisenberg case, we've seen it with what's happening with FTX. Regulators and law enforcement seem to be very comfortable using the powers they currently have to go after and pursue wrongdoing or investigate the crypto industry. You're seeing types of wrongdoing being looked at under exactly the same laws that are on the books that are being used to go look at wrongdoing in traditional financial markets. So I think with every time that there's an investigation open, every time there's some sort of enforcement action that's brought forward, is taking the pressure off Congress, off other policymakers to put new rules in place. And I think certainly what we're seeing here with the reports about the investigation into DCG is the SEC, Department of Justice, they're saying the rules that we have, that we've had on the books for years, these are enough for us to take a look at what's happening in some of these crypto institutions, and hopefully get to the bottom of what's happening.
So Gareth, if it's okay, if we could just let's step back a second here and explain to the audience exactly what DCG is accused of doing by Gemini, and from my understanding, and you can explain this to me as if I were a mule, because essentially, I'm not of the three hosts here. I'm definitely not the smartest. I'm definitely bottom IQ here. So, if my understanding is that what it sounds like they're being accused of doing is taking money from Gemini and giving it to DCG shareholders. What exactly? I'm sorry, taking money from Genesis and giving it to DCG shareholders instead of to the Gemini customers. Is that correct? I mean, can you explain how they're accused of doing this in terms of like what exactly happened or what they're said to have done? Are you familiar with any of the details of that, or is it just sort of like vague, amorphous accusations here that the general public can't quite figure out?
I think that's exactly right, Lawrence. I think the best evidence we have is the letter that Cameron Winklevoss put forward to Barry Silbert, kind of asking a number of questions and making a number of statements. I think if you go back and look at the Gemini Earn program, Gemini Earn program was offered to users of Gemini where they could provide their funds, their crypto tokens or holdings of GUSD. And if you go through the terms of use and the terms of agreement that Gemini Earn users did, it basically was you're giving this money to Genesis. Genesis, of course, is one of the largest borrowing and lending over-the-counter shops in crypto, and Genesis was lending these funds to various hedge funds and market makers and other players in the space. But this was a way for Gemini users to see yield of some sorts on their assets that they held with Gemini. I think what we believe is being accused, and again, this is not in lawsuits, this is with public letters that are being released on Twitter, so all this, of course, has to be taken a little bit with a grain of salt because there's a publicity element to this as well. But what it appears is that Gemini is accusing DCG and Genesis of mismanaging the funds that were placed with Genesis by the Gemini Earn users, and what I'm reading through the lines is that Gemini is saying because of the lack of risk management, because of the use of those funds to pursue other ventures beyond just helping create yield for the Gemini Earn users, there's been some sort of mismanagement of these funds. I think this is going to be, whether this is the scope of the DOJ and SEC investigation is one question. And the other question is really, is this going to be more of a commercial dispute, business dispute between Gemini and DCG? And I think you're going to have to really look at the terms of and conditions when a Gemini Earn user placed their funds into Gemini Earn. What exactly were they agreeing to? And what should their expectations be? I think that's going to be a big question here, and I think it remains to be seen whether the Gemini Earn program and how Genesis handled those funds will be included in what's been reported in Bloomberg and elsewhere about the probes.
So there's some news just in. Apparently, Cameron Winklevoss is taking it up a notch, and Gemini's Cameron Winklevoss, and calling for Barry Silbert's ouster from DCG. This was just published on CoinDesk, so it's getting even more heated. I guess, which is actually related to the question I was just going to ask you. If we can just game this out a little bit. I mean, obviously we have no idea what anyone did or what's going to be ruled, but like if DCG is found of wrongdoing, right? Like, what are some of the possible things that could happen to DCG? Like, what are some of the possible consequences? And then what does that mean for the crypto industry, right? Because that's what everybody's asking. That's the question that we're getting every day. It's like, what's going to happen to DCG and then what? I mean, I'm just, I obviously this is a thought experiment, but I'm just curious, like, if you could play out some of the different scenarios here.
Thanks, Emily. And it's a great question. I'll do my best. I think, at first, the first question is whether, if DCG should be, accused of wrongdoing. Now, this would be obviously if subpoenas are going out, this is in the very early stages of an investigation. They're going to have weeks, if not months, to respond, and they'll be collecting emails. There'll be negotiations between lawyers with DCG and law enforcement officials regarding, what type of documents are going to be turned over. This will be a months, if not longer, process in terms of understanding exactly, what was happening within DCG. So I think the timeline for that is going to be perhaps, again, you can't make predictions in this business, but it might be a little longer than certainly what we've seen with other investigations in the industry. And how it could play out, it will really depend on the fiscal solvency of DCG. If there is leadership changes, if there is, there's going to be a lot of interest in what the worth of the assets that are held and controlled by DCG, and who has claim to those assets. That's going to be really, I think, the principal question. If there is some sort of claim of wrongdoing, but just to go back to what I said earlier, subpoenas, these are scary words for sure. No one wants to get a subpoena. Subpoenas are a very common practice across the financial services regulatory ecosystem. And I just think it's too early for us to assume that because there is subpoenas going out, that there's going to be some sort of finding of wrongdoing. There's just a night and day difference, I believe, between entities that are based here in the United States and organized under laws here in the United States versus some of these much more opaque overseas entities that really do not take risk management seriously. And then going, to the second question, the impact on the industry at large, I think we are seeing time and time again as the market goes down an extraordinary pressure testing of every single entity in this ecosystem. The famous Warren Buffett quote, what is it, when the tide goes out, you see who is swimming naked. That's what we're seeing now. We're seeing it from a market perspective. Every piece of liquidation is being washed out. Any entity that didn't take risk management or regulatory compliance seriously from day one is being exposed. And we're going to keep seeing that happening until only the strongest players are left. That's what I believe. And so it is both good news and bad news. The bad news, of course, is the pain on the chart that Lawrence was walking us through earlier. But the good news is that the entities that managed to survive this will be on a much stronger foundation going forward, and also will have the benefit of learning numerous lessons in a very short time period, which they can then integrate into their own operations and risk management.
So speaking of the tide going out, Avi Eisenberg and Mango Finance here, because this is actually of interest, of course, because in many ways it was showing a vulnerability in the market. He was pretty blatant and vocal about what was going on as it was happening. And looking at this, I guess the question is this. He's been charged with market manipulation. The question here is this is a decentralized exchange, number one. Number two is it wasn't regulated by any entity in the United States. It doesn't seem to be any entity. And number three is that he was following the rules of that exchange. He did not change any code. He didn't hack. He didn't do anything. It doesn't seem like he did anything fraudulent, like lie, in terms of what he did. He just basically saw a massive weakness in an illiquid market and did what people are supposed to do in capitalism, and that is try to do something until that profit runs out. And he gave up, but he took in $100-something million, which I think foolishly gave up, because that should teach everyone not to use these joke DeFi platforms. But who am I to But anyway, that shame on them, not him. But why is he being charged? Why is this guy who is doing the Lord's work now being charged with a crime when he should be knighted?
It's a great question. Lawrence, code is law and arbitrage is risk-free until you get arrested and the police show up. This is going back to, I believe that regulators, law enforcement, they're looking at the laws they have on the books. If it's, be it wire fraud, be it market manipulation, securities fraud, they're looking at these laws, which happen to be fairly vague and open-ended and haven't really been tested in the crypto industry yet. And they're saying, what we're seeing in DeFi, what we're seeing in crypto, there are some perhaps overlaps between that activity and what these laws were intended to cover, the spirit of these laws, and perhaps even the letter of these laws. And that's what they're doing. The market manipulation law, just in general, is really focused at types of activity that try to influence price action beyond the normal forces of supply and demand. So if you look at what was required for Mr. Eisenberg to undertake this arbitrage or this exploit, whatever you want to call it, was he had to inflate the price of the Mango token of over 1,000% in order to build a large base of collateral that he then could use to withdraw USDC and other stable coins. So it's exactly as you said, Lawrence. He took advantage of the protocol exactly the way it was designed. And he, used that to remove funding. The CFTC and the SDNY is looking at this. They're not saying you provided a service to the industry. They're not saying you helped make other DeFi protocols that do borrowing and lending more resilient. They're not saying you showed the weaknesses of the oracles and of the using illiquid tokens as collateral. They're saying you manipulated the markets. You took action to manipulate the price of an asset, and that fits the market manipulation law. And we're going to see if a judge and jury agrees with us.
Well, you're saying in your article that you think that these plays are necessary and they do help out in a way. If you consider him a white hat hacker.
If you put yourselves in the shoes of a DeFi protocol, you want to somehow do borrowing and lending and trading on a platform that is permissionless, that is trustless, where anyone can participate. You need some sort of auditing device. You need some sort of very smart hacker to come in and test it from every single side. Because if they don't manage to find the weaknesses, North Korea will. And other bad actors will, and that the user funds not just are gone, but will be used for building illegal weapons programs and things like that. So you need people in the ecosystem who are willing to take days, hours, weeks to put their knowledge to use to pressure test these protocols. The question becomes, and the conundrum becomes, how do you do that where that it's incentivized enough, where there's some sort of financial reward, but more importantly, how do you pressure test the protocol when, in order to do that, you might have to inflate a price of an illiquid token. You might have to undertake the types of activity that law enforcement and regulators consider to be market manipulation. Yeah. And so if you have yes.
It's not like he went out to market and promised to yield. Yeah. It's not like he went out to market and promised to yield like some companies I know.
Well, it would have been an extraordinary yield based on the products. It depends on how I would say maybe a gray hat hacker, because he didn't return fully all the funds that he took, but he returned enough that in his definition made users whole. So Mango had an insurance policy that helped cover the various losses from an exploit like this. So I think if he had returned in full all the money, it's a question of whether the CFTC and SDNY would have gone after him. The action would have been the same, right? You could still say there was market manipulation. But there are numerous entities out there right now that incentivize white hat hackers who are basically doing the same type of operations that Mr. Eisenberg did, but they're doing it in a way where they aren't themselves profiting from user loss. So I think that it's unclear. I'm very interested to see the filings in this case, what Mr. Eisenberg's lawyers are going to argue. But I think what's also interesting is if you look at following the Mango exploit. By the way, Eisenberg had been publishing that he was going to do this for a while, so it wasn't exactly a surprise. There was there Discord channels. This wasn't exactly this. Also, he wasn't the first person to undertake this type of arbitrage or trade. He went after Curve and Avi a few weeks later and failed. So I think every single DeFi borrower, lender is right now looking at their code, they're looking at their platform, and they're saying, we have to make it more resilient given what Eisenberg did with Mango. And that is a benefit to the ecosystem.